Hey everybody, thanks for joining me today. Today we're taking a look at Coca Cola Company, ticker symbol KO. The stock is down over 15% so far this year. In fact, the stock was up around $64 in May 2023. Here today in October, it's down to $54. So a 15% price decrease from Coca Cola is something that we've only seen about 4 times since 1985. So this stock does not take these big drops like we are seeing right now. In fact, the PE is among the lowest it's been over the last number of decades. So it is a good time to take a look at Coca Cola to figure out if it is a buy or not. Certainly one of the biggest investors out there that owns Coca Cola is Warren Buffett. He owns about $22 billion worth of shares. He's also known for drinking several Coca Colas a day. He loves the brand, he loves the stock. So let's take a look more into the company. In 2022, Coca Cola did about $43 billion in net revenue, about $12 billion in operating income. Out of that $43 billion in net revenues, 18% came from bottling investments, 17% came from Europe, Middle East, and Africa, 11% came from Latin America, 35% came from North America, 12% came from Asia Pacific, and 7% came from global ventures. So this is a global company that sells products across the board in all different kinds of countries. Coca-Cola has been expanding its brands and different products they're bringing to the market. And some of those brands that they've purchased and brought to market or integrated into their company were companies like Costco, which is in the coffee industry, Body Armor, Fairlife, and they're also doing strategic partnerships with Monster. They're also getting involved in areas they haven't been at in the past. For example, in the alcohol industry, partnering with Jack Daniels and some other companies as well. With their expansion into new markets, you can see their addressable total market has grown substantially over the last several years. So in 2017, their total addressable market was roughly around $650 billion. 2022, they're estimating at $1.3 trillion. And the expected CAGR growth in these different areas of their business are expected to do very well. For example, sparkling soft drinks supposed to grow 4 to 5%, water, sports teas, coffee, and tea growing 5 to 6%, energy 7 to 9%, hot beverages 5 to 6%. Overall, the company is expected to grow their top line by about 6% over the next several years. So why has the stock fallen almost 15% this year, which is one of the biggest drops we've seen over the last 3 decades for this company? Well, there's a couple different factors, but the main one that's driving the markets on selling off Coca-Cola and other beverages and even other food companies is simply that there are new drugs that are coming to the market, for example, like Ozempic, that is supposed to suppress appetites, and that is scaring the market, thinking that people are going to buy less of these types of products. Even Walmart came out recently in their quarterly earnings and stated that some of their food and drink beverages have fallen here in the last quarter, and some are suspecting that has to do with these drugs, which again are tied to weight loss or appetite suppressing medications. Next up, let's take a look at a 10-year financial history for Coca-Cola. So their enterprise value has grown from $204 billion back in 2013 to about $260 billion here today. Sales per share has actually dropped slightly over the last 10 years, going from $10.63 in 2013 to $10.21 here today over the last trailing 12 months. So that is a 0% growth over the last 10 years, 5% growth over the last 5 years, 10% over the last 3 years. Earnings per share had slightly higher growth than sales per share, going from $1.96 to $2.43. So that's a 2% CAGR growth over the last 10 years, 10% over the last 5 years, and 10% over the last 3 years. So those new brands, new markets that Coca-Cola is getting into, we are seeing some recent growth in that aspect. Now, free cash flow per share, very similar, going from $1.81 to $2.19 here the last trailing 12 months. That's a 2% growth, just like earnings per share over the last 10 years, 9% over the last 5, 3% over the last 3 years. Now, book value per share, now that one has actually dipped, going from $7.59 in 2013 down to $6.37 here today. So it's negative 2% decline, 7% growth over the last 5 years, 9% growth over the last 3 years. Now, return on invested capital has been very impressive with Coca Cola. On average, over the last 10 years, it's been 11%, 14% for the last 5, 14% for the last 3. Now, if we take a look at debt and items on the balance sheet to determine if this company is sustainable, has enough cash, and has low debt, we can take a look at a couple different metrics. So one of those is operating income over net debt. So how long would it take the company to pay off their net debt based on their operating income? On average, it's been very conservative, very consistent over the last 10 years, being around 8.4. So they look very good there. Now, debt to equity, it is higher than I would like to see. Right now, it's at 157%. Their 10-year average has been 183, 5 years, 183. 3 years, 166%. I typically like to see companies under 100%, preferably under at least 75%. So this is pretty high. However, their current ratio is over 1, so at least gives me a good feeling that they have more current assets than current liabilities. So at least over the short term, they should be fine. And this is a great company just in general. So I really don't have any concerns about their balance sheet and where they're at right now. Now, if we take a look at a multiple that the market has been willing to pay for this company, it's been very high for a beverage company over the last 10 years. It's been a 22. Currently, it's trading around a 21 last 3 years, and 5 years, it's been around a 24. And one of the reasons why the market has been willing to pay such a high multiple for a company like a Coca Cola is they have been so consistent, not just on, like the return on invested capital, but certainly from the dividend as well. They have a very healthy balance sheet. Now, some of the growth numbers that we've gone over have not been great, certainly over the last 10 years, but they have been very, very consistent overall. Gross margin for the company right now is at 59%. It's been about 60% over the last 10 years and then 59% for the last 5 and 3. So more consistent numbers there. Now, as far as operating margins for this company, they've averaged 27% over the last 10 years, 29% the last 5, 29% over the last 3. So that is a good indication that their margins actually have gotten better over the last 3 to 5 years. And not only that, but their sales per share and earnings per share have also grown about double digits. So that is a good sign that certainly in the last 3 to 5 years, they've seen some really good growth, especially from a company that has a $260 billion enterprise value. Next up, let's take a look at what analysts think this company is going to do over the next several years. You can see this graph here. So blue is sales growth, orange is operating income growth, green is net income growth, and then yellow is free cash flow growth. So analysts think the revenue is actually going to grow from about $43 billion in 2022 to about $55 billion in 2027. So that is roughly a 5 to a 6% growth on the top line. Management thinks they're going to be coming in at 6%, so it's pretty close on what management feels they're going to be doing over the next several years. Now, operating income is going to grow about 7% per year on average. At least that's what the analysts think they're going to do, going from roughly $12 billion in 2022 to about $17 billion in 2027. Now, free cash flow is also supposed to grow roughly around 6%. So it was about $9.5 billion in 2022. That's supposed to grow to about $13 billion in 2027. So a lot of these numbers are very consistent on what management is saying from Coca-Cola. Something I should also point out, analysts think that EPS is going to grow at 10% per year, which is a bit higher than sales, operating income, and free cash flow. Okay, next, let's take a look at our first valuation model here, and this is the margin of safety calculator. So I think a normalized earnings per share for Coca-Cola is around $2.50. If we take a look at where they're at currently on their profit and loss statement, which is also their income statement, we can take a look at right now their earnings per share is around $2.41. So $2.50 for me is pretty conservative. So if we go back here and take a look at growth, I think their earnings per share is going to grow around 10% per year, which is similar to what analysts think the company is going to grow as well. So that comes out to be a target buy price of $26, roughly $27, and the current stock price is at $54 here today. Next valuation template we're going to be taking a look at here is my discounted operating earnings model. So I'm going to be projecting out operating earnings and then discounting it back today to figure out what I would pay or what I think the fair value of what this company is currently based on these assumptions. So I think sales is going to grow about 6% per year, which is what analysts or similar to what analysts think it's going to grow, but really in line with what management says they're going to grow over the next several years. So I think they're going to be around $45 billion in sales this year, then $47 billion next year, then $51, then $54, and then about $57 billion in 2027. Now, if we take a look at operating margins, last year they were around 28.5%. I think this year they're going to be around that 28.5% to 29%. Then I think they're going to stabilize around 30% going out into the future. Based on a multiple of 25, I get an intrinsic value share price about $49 for the stock here today. Now, I do want to point out this multiple 25 is very, very high. I do not typically put a multiple this high for companies, but the market has been paying close to a 24 to a 25 historically for this company for an enterprise value to EBIT ratio. So I do think the market does have a high value and willing to pay a premium for this type of stock. So I'm okay with using a high multiple in this situation. Next up is a 10 cap valuation. So I'm looking at owner's earnings of a company, and what I want to do is basically buy it at 10 times earnings or less, and that's what I think is a good value. This is also a Phil Town valuation if you follow him. So I think free cash flow of the business normalizes around $10 billion. I think their tax provisions are around $2.3 billion. Their shares outstanding are roughly 4.3 billion. So I get a 10 cap valuation about $28. So based on this valuation, $28 would be a good buy price. But again, the stock is trading at $54 here today. Next up is the payback time calculator. So this one looks at free cash flow, and what we want to do is try to buy the business at 8 years or less. So essentially, if we're putting money into the company, we want to get our money back in 8 years or less, because in general, the market is willing to pay at a rate of around 16 across the board historically. So if the market is willing to get their money back in 16 years and we can try to get our money back in 8 years, that at least gives us some good margin of safety where we think we're buying the stock at a good, reasonable margin of safety at the time. So again, I think the free cash flow is around $10 billion. And then I think the growth rate is around 7% for free cash flow, which is very similar to what analysts are saying they're going to do, and based on the numbers I looked at. So I think that's very conservative. So I get a payback time of 13 years. And this type of model actually maxes out at 13, so it might be much higher than that. So according to this model, it does not look like it's a good buy right now. So let's take a quick look at the valuation summaries we just went over. So my operating income model, I came with a fair value of $49 for the stock. Again, it's trading at $54 here today. So a 30% margin of safety would give me a buy price of $34. The payback time calculates the stock buy price at 25. 10 cap is 28. Margin of safety calculator is 27. However, I do want to point out that all these valuation models do not factor in dividends at all. And if you know anything about Coca Cola or have been following them for any period of time, they do pay a very consistent dividend. Here today, it's around 3.5%. So let's talk a little bit more about return on investment for this company and include the dividend in it as well. So here's a return on investment I would think I would get based on the assumptions that we saw earlier from the different models. So for example, with the stock trading at $54 today, I think I would get around a 6% return on investment from the stock. Now, that does not include the dividend. If you're going to include the dividend, I believe the return on investment in the stock would be roughly between 9 and 10% based on today's stock price. But if you're watching this video in the future, the price drops down to $40 a share, let's say, then I would expect around a 15% return on that. And then if you factor in the dividends, that'd be around 18 to 19% return based on that stock price. So let me just summarize again what my assumptions were before. So that is a 6% CAGR for sales growth over the next several years. Operating income, I think, is going to grow around 7% per year over the next several years, and that is a market multiple of around 8.25. And again, right now, the dividend is around $2.44 per share, and that's annualized, and their current yield is around 3.5%. Their payback ratio is fairly high. It's almost 80%, but their balance sheet is in pretty good order. They have plenty of free cash flow, so I do not see that they're going to have to peel back the dividend anytime soon. Thanks for sticking all the way through the video. I really appreciate it. If you got some value out of this video, please like it. If you like this kind of content, I encourage you to subscribe to my channel. If there's a stock you'd like me to do analysis on, drop it down in the comment section. I read every single one of those. Thank you so much for watching. Take care, and God bless.